The broadcast is now starting. All attendees are in listen-only mode.
Hello, Warriors. How's everyone doing today? Let's have a great week. Hello, Dan. How are you? Our webinar is now being sponsored by Forest Park Futures. They're your trading solution. If you have any questions about a broker or looking for one, um, if you want to participate in the rebate program and you're outside of the U.S., just call Forest Park Futures. Ask for Trent. Trent knows we'll be able to answer your question on almost anything. So we have a nice resource with Trent. I've interviewed him before, and it's a one-shop stop for you guys. So give them a call, introduce yourself. If you're not satisfied with your broker, I'm sure they could find a solution for you. So here we are, dollar pushing up to new highs. My bias is to look for a reason to fade it on the 4-hour chart. I'm getting pretty glaring divergence. It reminds me of what happened in the yen last week when the 4-hour was diverging, but it took another 2-3 days for the 1-hour to get in agreement. And I consider Monday kind of setting the table for me for the week. And I do believe there is a chance for some type of correction here. Are we going to push to all the way up to 94 or 94.50 first? You know what? I believe everything can happen. But my bias is there's at least something short-lived here, maybe a pullback to this line setting up for maybe tomorrow. And so if I see that in the dollar, I'm most likely seeing that in euro. Euro's not so clean on the 4-hour. I don't like this reading. It's almost like the structure is more favorable in the dollar. Maybe that has to do with some of the other weightings in the Dixie besides euro. So here euro is making another new low for this pullback from 125. And I just want to stress again, especially if we hold the 86.80 level, that I think that the euro pound could be a sleeper trade, because I understand why no one talks about it, right? We've been in this range that Steve shows over and over again for a long time. Okay. It's my contention, though, that the Bears had a great shot for a breakdown and a failure, and it was a breakout failure. They still had hope. Then I talked about this with Lydia on her interview, and I believe this was an NFP day, may have been an NFP day, but it happened on a Friday. Not sure what it was, a red event, and it's I told Lydia, could we put in a right shoulder when we were here at around 87, low was 86.80. Okay, so just a little coaching here. Normally, in a real good bear market, in classic bear market in euro, EG will be making new lows even before the euro. It'll lead it. Okay, give me a while if you understand the concept of leadership. And then if it's not leading, you start to get some type of other market message from it. So the market message I'm really getting from this trade is that I think a lot of people, there's no reason for long-term people to think that the trend has changed yet. Maybe they're giving back profits if they sold it good. But it's my contention. I'm going to go with the low is in. This was our second higher low. And I would say any pullback, 87.80, 87.50, I'd use this 1-2 day pullback with a line in the sand under 86.80, because I still feel there are a lot of shorts to be squeezed, tons of stops over these levels here. I'm sure stops are layered by different bears and shorts depending upon their entry in the trade. They entered it here, their stop was here. If they entered it here, their stop was here. Maybe they moved it, maybe they traded it. But you're not hearing about anyone talking about EG on Twitter or anything. And if we could generate this close over 89 and a half, then you're talking about these highs. And, once in a while you get a picture stuck in your head and it gives you a bias. And I don't know, for months and months and months of the sideways action, my bias in Euro pound was what, for people that know me? Something looks incomplete to me. How about to you guys? See any incompletions? Okay. So there's some resistance at the 50-week here, but what makes me think this is incomplete is this was 1, this is 2, and we'll get a 3. So if we start closing over 89, 90 right here. So let's call it 86.20 to 90.20 gives you 94.20 for a third drive. So that makes me think that if the dollar turns, I want to be long Euro over cable. But just wanted to give you a long-term theme, and that's why I favor Euro over cable. Cable's a short on strength, Euro's a buy on dips. Everyone with me? And then there's one more chart I can't get out of my head, which affects my view on US dollar yen. So for a while, and I won't say there weren't some periods of doubt, but every time I looked at this chart here, the NASDAQ 100, to me it looked incomplete. Now, a guy I interviewed who's very good with pivot points, let me find Jeff York. Okay, Jeff thinks there's going to be a right shoulder in NASDAQ. Let's see if I could find it. Real nice chart he sent. I should have looked for it earlier. Anyway, getting back to this, I think I see the potential for a third drive. Even if you take a measured move here, we could stall here above 68, but you just go 63 to 68, and if it works sideways for a while and breaks out over 68, tack 500 points onto it, it gives you 7,300 in the NASDAQ 100. So, I'm looking for that, and Jeff York's looking for a shoulder, like right here around 7,000. So even if it's only a rally to 7,000, it affects my bearish view in yen. Although I was last week and we were long from the bottom, but it's hard for me to see new highs in NASDAQ if that's going to happen with the yen falling apart. I'm not saying it's weaker than the dollar. We had that negative week last week. It really wasn't even that negative. It was unchanged. Okay, so, but if I'm looking for a peak in the dollar, I'm thinking there's at least one more short in the end here, or maybe some type of ABC, maybe halfway back. We didn't quite get halfway back. We'll be there tomorrow, around 109 and a half. That it could be a shot for one more drive down towards 840, but I can't. I have some confluence at 840. I have the potential of a 3-driver down there. Here's 1, here's 2, maybe we get one more. And also the wedge line that it blew through on a throw over comes in right around there. So 88, 105, 30, 40 kind of an important line in the sand. If it gets through that, like Blake was saying last week, 107s there will be there in a heartbeat. So, any questions before I turn it over to Blake? Okay, who's our new sponsor? Anyone remember? I'm
Forest
giving you
Parks
a pop
FX.
quiz.
Forest Parks FX. Oh, am I not part of this?
You're all of it, man.
All right. Well, you know what? It's important to mention Forest Parks. First of all, for those of you that don't recall, Trent Hoyer, he was a guest with Dale. But sometime last year, I want to say it was 2017, like probably mid-year 2017. Trent's one of the principals there at Forest Parks FX, and these guys are sponsoring the FACE webinar. So I encourage you guys to look into them. They are really the reason why the FACE webinar is happening now. And, these guys, they have the same philosophy as us from a business standpoint. We want you guys and gals to be successful as traders. That's why we offer these webinars, because it's more important for the industry to survive and traders in the industry to survive. It's the most important thing to us. If we get some business along the way and, you guys end up joining our community, that's a plus for us. For them, as far as being an introductory broker, what they do is they funnel traders to whoever is going to suit the trader best from a broker standpoint. So, and we do have a reimbursement program that we've been working with FX Parks for the last year plus. If you're not if you're a trader based outside of the U.S., you can be involved in our reimbursement program. But if you guys are U.S. based traders, you can also talk to Forest Parks FX, and they're going to put you in and connect you with a broker best based on the volume you trade, the size that you trade. If you're looking for, rebates, or if you're looking for, no commissions or lower commissions or better spreads or better leverage, and they have relationships with pretty much every broker in the world. So that the thing is they just want to do what's best for you. So that they look at you and kind of individually as a trader and say, okay, tell me a little bit about yourself. What's the best way you're going to thrive in this industry and in this business? And that's what they do. And so I am really excited that they are teamed up with us because of the way that they do business aligns the way that we do business. So you should check him out. And Trent will, and just so you guys know, Trent, he's our point person. He is going to be in our chat rooms to answer any questions. And this is for our ForexAnalytix community, obviously. He'll be in our chat rooms on a regular basis, answering any questions. Like if you guys go, my broker, I'm getting some slippage over here. Can you look into it? Or, are there other brokers that, are going to give you less slippage or whatever? He's the guy to ask. And he's going to be either him or Justin, the other principal at Forest Parks FX. One of those two principals will be on with us to answer your questions. We haven't figured out the exact day, but it's going to be like, one Friday a month in the afternoon, when the markets slow down, to answer any questions that you guys might have. So we're really excited about our relationship with Forest Parks. So make sure you check them out. Dale, can you throw up the screen really quick so everybody can read how to spell? It's easy. It's forest, like if you're in a forest with trees.
There's a place in Illinois. It was a very exclusive suburb called Forest Park. A lot of
Forest Park.
Traders, yeah.
Right, but you got to love their logo, helping traders go green. it's great. I think it's great. Anyway, Forest Parks FX. Make sure you connect with them. They're a great resource. Even if you decide just to stay with your broker, if you have any questions, that's what they're there for. They're there to answer questions, and they'll help you out if you need it or if you want it. But they're there to answer questions to anybody in our community. And it's a resource for you guys, no matter if you're a ForexAnalytix subscriber or not. You just feel free to use them and leverage their knowledge in the industry. Okay,
like sometimes I can't see the forest from the park, but now I know how I can.
Okay. Oh man, Dale, we're gonna have to get you a new setup. We're gonna have to get you a new setup.
I think they set up picnics if you work with them. They'll set up a picnic.
Oh, for crying out loud. Okay, so hope everybody had a great weekend. Let's talk a little bit about the price action this morning. First of all, the euro is pretty weak. We had some weak factory orders in Germany overnight, and that's actually, is this a 3 drive? Is that what this is? Is that what you just pointed out, Dale? This is a 3 drive. Oh, I thought you just said something. Okay. Anyway, I think the euro dollar is probably near channel lows here. I'm probably going to see a bounce soon, but it's been a pretty slow grind because it is also a holiday in the UK. What holiday is it? Does anybody know? Is it Labor Day? Is it May? Oh, it's May Day. Okay.
Forest Park Day.
It's Forest Park Day. There we go. It's Forest Park Day. No, it's May Day.
The communists they're marching in London.
Jeez, Dale. Oh my God.
No, but that is a 3 drive. It is a 3 drive.
It is a 3 drive. It is a 3 drive. Okay.
I don't like the RSI moving though. My preferred longs are when the RSI is over 30 on the 3rd drive.
Oh, okay. Got it. All right. So right now we're seeing we are seeing some it is divergent, and we're oversold on the 4-hour. Just remember, there's a big confluence of support down here. It is. I mean, I know we're trading below it, and you get excited and you're like, oh, but it's breaking down and we're below it. But really, when you're within, especially if you're looking like at a daily chart, like what we're staring at right now, you're within 30-40 pips of a fib level. You're really testing it. Sometimes we hit the levels exactly, but you can see just over the last few days we've been kind of around those levels. So I wouldn't be surprised if we bounce back to 1950. But what's really strong right now, which continues to be strong, are yields. Bonds are weak again this morning, and that's what's put the dollar yen a little bit higher. And we traded last night. We traded down to the 80s. We were down at 108.80 or 108.75. We bounced a little higher. We're at the 50% retracement right now, around the 109.30s. And, we're just kind of bouncing around. I think while the dollar yen stays below 109.50, I think it's the chances of a move like this are still high. So I've already started selling some dollar yen this morning as a result, because I'm gonna get myself positioned for a potential reversal, and that's the way I'm looking at it at this point. But I'm looking for at this stage a move back below 109 before I get too excited. The cable's holding up a little bit. We're at 127% extension. I'm actually still expecting a bounce higher. If you one of our teammates, Joe Perry, if you saw him on Bloomberg on Friday, he was talking about the divergence in the pound dollar, and if you see, it's still really divergent here. There's a good chance that the pound gets a nice recovery back to 137 if the euro dollar can stage a bounce, and I think that is entirely possible at this point. The one currency that also is extremely strong once again is the dollar Swiss. The dollar Swiss has lunged to new highs, and we just broke through this near-term resistance. You can see it right here. Huge resistance at 1.0039, I think it was, or basically 40. We broke above it at least slightly, maybe even enough to take out some stops. But look at how overbought the daily relative strength is. I don't think we've ever been this high in relative strength. Let me mark up. Oh, I guess we have. That I can go back on this daily chart. We've been here one time, and the last time that we were here, if you guys can't see it on your screen, there was an epic fall after that. I mean, this is, I'm not expecting this to happen again, but last time we hit relative strength like this happened, right? Again, I'm not expecting that to happen, but I am expecting a bit of a pullback here, as relative strength is extremely overbought. I do think that we're going to eventually give it up a little bit. I'm not willing to step in front of it. I've tried it a couple of times the last week. I've tried to stand in front of the Swissy and I've shorted it, and I think I've gotten run over both times that I've done it, if I'm not mistaken. So it's pretty dangerous. Actually, I take that back. I did make money, slight. Like I got out basically for break even or making a little bit. But I've tried to stand in front of this move last week, and it's very difficult to do. I think you got to let price action show a reversal before trying to get in front of it. But I think that the risk is there for the Swissy. What else am I looking at? The Aussie, it's still, it may be down right now, but we're still holding this, this support. I'm not long the Aussie at this moment, but I, see the risks here. I think that it could bounce. The Kiwi also, once again at the 161% extension, pretty oversold. I think that the risk here is for a possible bounce as well. The U.S. dollar Canadian, nothing's going on. And if you watch the week ahead video, I'm steering clear of the dollar Canadian. Wow, look at the euro, just made a nice little bounce as we were talking about it. See that? Yeah, bouncing right off of some support here. So the euro's getting a little bit of a lift. I think chasing it down here is pretty dangerous. It's kind of what I was alluding to with this channel support. But going back to the Canadian dollar, I'm really sidelined with the dollar Canadian. I'm not messing with it. I'm waiting till we get some definitive news about NAFTA and what's happening with NAFTA. And once I have a good handle on what I think is going to happen regarding NAFTA moving forward is when I'll start plotting what I want to do. I do think, and I'll state this, that once we get past the NAFTA negotiations, the Bank of Canada is going to become hawkish in a hurry. The only reason why they are standing aside right now and not raising rates is because of the uncertainties that surround the current NAFTA negotiations. If we can get past that, I think the Bank of Canada will be extremely hawkish. And then that whether I decide to short the dollar Canadian or short the euro Canadian or buy the Canadian yen, that'll be seen. I think we have to see what it looks like the better setup at the time. But that's how I'm planning on playing it, at least once we get past that. A couple of these Nordic currencies probably should pay attention to: the U.S. dollar, Norwegian krona. I know Stelios has a pattern in play. We had a big rejection at a 618 right here last week. It was huge. We broke down, but you see how the euro just hit new trend lows, and the U.S. dollar, Norwegian krona did not, nor did the U.S. dollar, Swedish krona. So these Nordic currencies are, to me, suggesting that the euro's fall is not going to be too aggressive at this point. The Nordic currencies have basically stopped when the euro continues to go down, which wouldn't make me feel very comfortable about being on the short side of the euro at this point. let's see, the U.S. dollar Mexican peso. This has had a nice rally. We're above a daily trend line here, and the peso, a lot like the U.S. dollar Mexican peso, U.S. dollar Canadian. I'm not trading it now, but there's another component to the peso, is the election that is going on in Mexico, and I'm not up to speed on Mexican politics, but we do have a gentleman named Oliver who's in our chat room. That's he lives in Mexico, and he trades pretty actively, and he's keeping us abreast on what's happening with the Mexican elections, which is good because it's not something that I'm following too closely. But I think if I'm going to be trading the peso following the NAFTA agreements, I'm going to probably pay a little bit more attention to the current political environment, because the front runner right now is not going to be viewed as too bullish the peso. We don't think, anyway. But again, I'm not the person to talk to about it. But I'm gonna get myself a little bit more educated on Mexican politics, I think, moving forward. What else? The dollar index. The dollar index is challenging this big resistance zone. I think it's a pretty big resistance zone around here. And again, the RSIs are very overbought. You can see we're still divergent here. So chasing the dollar higher at this point is not my. Ooh, you know what I need to point out? Look at bonds. What just happened in bonds? So the bond market was actually bonds were selling off, yields were rallying, and all of a sudden we saw this reversal. And look at bonds taking off now. So bonds have rallied just over the last 15 minutes. And when yields fell, that's what happened with the dollar. I think the dollar is at this point is more of a bond story, and that's why we have to be very careful. As I pointed out in the week ahead video, you got to watch bonds. The biggest speculative position out there right now is short the bond market, and if the bond market turns around and we start rallying and yields come down, that's going to be pretty bearish to the dollar. And that's we've seen the dollar reverse pretty aggressively as a result. With that being said, I'm going to pass it over to Steve. There's a lot of cross rates I'm sure he's going to cover. I'd like to hear what he has to say about precious metals. Steve, good morning.
Hey, Blake. Good morning.
Good morning. So I hear you went to your 20-year high school reunion this weekend.
Yeah, that's actually very true. It was an interesting experience.
That's awesome. That's always fun seeing people and that you haven't seen in years. So that's great.
Yeah, it was a great night indeed.
Awesome.
How was your weekend? You had family over, right?
I had hosted family in town all weekend, so I'm a little groggy today. To be honest, I'm a little rough around the edges, but hey, one thing I want to mention before I go, and I mentioned it earlier, I'm really excited to have Forest Parks FX is our sponsor now for the FACE webinars. We've been working with them for the last couple of years. They're a great group of guys, and they run a great company, and I love what they do for traders, and that's why I'm so excited to align with them, because they really try to take care of their traders one by one on like one-offs, which is, it's not normal of this industry, and I think that's that speaks volumes of what they do, and it's also very in line with what we do. So
very true. I can attest to that. Yeah. And both Trent and Justin are great guys.
They are. The two principals there are they really do great things for their clients. And like I said, you don't have to be a ForexAnalytix subscriber to talk to them. Talk to them, and they'll point you in the right direction, even if it's even if it's not a broker that they do business with. They'll at least point you in the right direction based on what your needs are, because everybody's needs are different, right? We don't all fit in one. We don't all fit in one
I bet there are some people looking for a safe crypto platform to trade off of. I know a lot of people are trading crypto.
I haven't talked to them about that, but I know that they have so many relationships. There's so many brokers that do have, the ability to trade crypto through them, that they would know who those are. And yeah, that's definitely a question that I can't answer. So those are questions that they'll be able to answer. Anyway, you guys have a great webinar. Have a great Monday, everybody. Thank you very much.
Have a nice week, Blake.
You too, Steve. I'll see you guys a little bit later, and everybody have a great trading week. Thank you.
Hey, Dale.
Steve, how are you?
I'm good, mate. I hope you had a week.
Do you have any feeling? Do you do a lot of trading on Monday and Friday? Or you're not even conscious of it?
I haven't thought about it, to be honest. I don't really. I've never looked at statistics of which are the trades I'm trading mostly. I guess usually I try to plan my trade, so that also depends quite a lot on when. Yeah, exactly. But most probably, I would guess that should be a little bit less on Mondays. You know what I mean? Because usually you have the day opening. And you want to see.
It's kind of like pool, the opening breaks, see how the table's set up.
More or less, yes. Or sometimes you see some kind of move beginning Sunday night, and then showing some follow through during European hours. But when the US comes in the game, you might completely get a retracement of that move. So sometimes it pays off to wait for at least a few hours within Monday to get a better idea. But as I told you, I usually try to plan my trades, and whenever the opportunity manifests, I don't really mind if it's a Monday or a Wednesday.
Yeah. Okay, it's curious because I find the meat of the week being Tuesday, Wednesday, Thursday for me. And Friday, occasionally a lot of reversals don't happen on Monday, I've noticed. And I look for reversals. We might be getting one here in Euro 3 drive, but normally there's follow through from the week before.
We'll see. The sure thing is that Euro seems so far today to be breaking below quite an important zone. You can see it here. Let me zoom in. There it is. If we do close the day below here, that's definitely not a good sign, because this is the confluence of the 61.8. It's also, we had a high, it acted as a resistance, this area, for 4 days in November. It then acted for 3 days as support at the beginning of the year. We've already penetrated, and we've already been trading below the 200 EMA. So I think that, if we close below 119, 119.30, probably not a good sign. The next area of support is the 78.6 of the last move higher at 117.68. So there is some distance to that. So I have to say that, this ended up breaking the downside. I really wanted to see one more push to the upside, but it is what it is. Since we got a breakout, we had indicated that whichever direction the Euro breaks, it should see some follow through, because when you have such a consolidation, the market is really getting ready to see some kind of a breakout. And when that breakout happens, it will trigger some stop losses on one hand. On the other hand, it's going to get it's going to trigger some people to go in the market, because some people might have been looking, for weakness, and that's why you usually see follow through. So this is the situation here. At the same time, not coincidentally, as EURUSD is testing a major support area, the DXY is testing a major resistance area. You can see that we've had a 3-day consolidation in that exact area, and we now seem to be attempting to break out today. If that happens, the next serious area of resistance I would be looking for is the 94.20. Why? Because the 94.20 is actually the 38.2 of the move that we saw from the highs registered at the very beginning of 2017 to the lows that we found in February this year. Okay, so this was a well-established 13-14 month downtrend, and this is going to be the 38.2. as you see, this same level acted also multiple times as a resistance. The last time we had a consolidation, actually. Let's call it a corrective consolidation, because we didn't manage to rebound much. So quite important day both for the DXY and the Euro USD. At the same time, we see that pound is trying to hold, although the pound has been much weaker. It's trying to hold. So far we're seeing an inside candle, but it wouldn't really surprise me if we saw another push lower towards the 38.2 from the post-Brexit lows. That comes at 134.30. Regardless, I have to say that even if we push lower from here before we see some kind of a rebound, any move towards the 137, 137.90, let's say between 137 and 138, I consider that area to be a very good area for people to be looking to establish short positions. I do believe that the nature of the move lower should produce at least one more leg to the downside after some kind of a rebound. So I was looking, several hundred pips ago, an opportunity to go short. That never came, unfortunately. But I'm not going to let this pass. I mean, I'm still going to take advantage of whatever rebound we get to get in the market. Speaking of the pound, let's also have a look at the pound yen. And the reason I want us to have a look at the pound yen is because it's currently holding a very, very important level. You can see it here. I just zoomed out to see how important this trend line has been. So in essence, we closed on Friday on this confluence because this is a very strong horizontal support resistance area. You can see that if you zoom out, you can see that since 2016, this general area at around 147.50 has acted multiple times as support resistance. In this case, it also confluences with this ascending trend line support. I do think that, especially if we break below here, we're going to see more weakness following. So the bulls are trying to put in a fight and hold this level. Do I think they're going to succeed? Probably not. I think that this is an important area of support that might slow down or even pause or even create some kind of a short-term rebound from here. But I'm still looking lower. Okay, so pound yen as well. I think it's a good short opportunity if we get any rebound towards the 200 DMA that comes at the 149 level. So both these pound pairs, I do consider them decent shorting opportunities. Let's also have a look at the crosses. Pound Aussie rebounding also from a nice confluence of supports. It is the 61.8. It was also previous highs here. Now, do I think that this makes it bullish once again? If you see what I drew there is that most probably, even if we get a rebound, I think we drew that together on Friday, even if we get a rebound towards the previous ranges support, I would expect a rejection for at least one more leg to the downside. So even pound Aussie, in my opinion, might prove to be a nice shorting opportunity in the near term. Okay, and let's have a look at the pound Kiwi. Pound Kiwi broke and actually closed the week below this. You can see it is an ascending wedge, right? I was monitoring closely this trend line. I think this is, a bearish break. Now, obviously, we have to confirm. So far, we're rebounding today, but on the other hand, it's just an inside day so far. I have to say that I would be looking lower for at least one more leg to the downside, as long as we do not move back above 194.30, 194.40. So as long as this horizontal area is holding as resistance, I would be looking for more weakness here as well. Less convinced, obviously. I mean, in comparison to what I said about the pound USD and the pound yen. So I'm not ready to commit to this trade yet, but definitely something I'm monitoring. Okay, now let's have a look at the Aussie and the Kiwi. We were talking about the possibility of seeing a rebound from here. Why? Because both of these pairs found and were making an attempt to rebound from extremely important and critical support areas. For the Aussie, that was the 75-cent area. If I zoom out, you can see why. It has acted as support resistance multiple times. We've already broken, and we have to say that because it's quite important. Let me show you the weekly picture. On the weekly chart, we've already completed a bearish break. You can see this. I mean, this looks like a big correction higher, and the fact that we broke below it is very indicative in my mind. But anyhow, this was also a horizontal area of support. We got 3 days of a slight rebound. We came up, we retested this broken descending channel as resistance. We seem to be getting rejected once again. And if this actually creates one more push to the downside and we do close below the 75 cents area, I don't see any real support up to the 0.7330 support zone. So, there is quite more of a downside to follow. Now, Kiwi, it came down, it retested a confluence of supports. It's the 61.8 of that move higher. It's also with a 161.8% extension of this little correction that we had. This was enough to produce some kind of a consolidation, but to be honest, the more we fail to rebound, we were saying on Friday that even if this causes some kind of a rebound, I doubt that it will be enough to bring us higher than the 71.80 area. I would consider, a rebound to the 71.80 area as a great opportunity to be short. It doesn't seem, though, that we're going to do something like that. The more we consolidate without actually managing to rebound in distance, the higher the chances that we're going to break down. And the next area of support is at the 68.80 level. So, Kiwi looks heavy as well. And, I think the chances of a resumption lower are quite high. Crude is still moving to the upside. I'm very interested to see what's going to happen when we hit the 72 level. I've been expecting that for a long time now. I really don't have any more upside levels afterwards. I mean, for me, this is a very critical area of resistance. 71.90, 72. Let's make it a round number. I would be expecting some kind of a correction, like a deeper correction after the move we've seen higher, and that would be a great level. So we still have a little bit more to crawl higher until we find that, and then I would be waiting for some kind of a reversal signal to actually participate in this market. Let's have a look at the CAD. Although nothing much has changed about CAD, you can see here it has already spent like a couple of weeks consolidating in a very, very tight range, the range between 128 and 129. I don't know exactly how this range is going to be resolved. I would eventually be looking, even if we see a little bit of a move to the downside, I would still be looking for one more thrust higher, perhaps 130, 131. Keep in mind that we're still trading within an ascending channel. We're a little bit higher than the middle of it. So not really a strong bias for USD CAD. I think there are better opportunities out there, but I have to cover it since I know that a lot of people trade it and a lot of people monitor it closely. Another pair I wanted to show, because I think that from a technical perspective is at quite a good juncture, is the USD yen. I was monitoring this ascending channel. So far, I tend to view it as a corrective. As you saw on Friday, we tested it as support. We got a very nice rebound from it. Once again, the same thing happened Sunday after we opened, and today we're rebounding. So far, this is a second hammer in a row. As long as this trend line is holding, obviously there is no confirmation that a move to the downside has begun. But I'm closely monitoring it. It seems more heavy than it was. If we do rebound from here and we start showing some strength again, I will be looking for the 61.8 of the move lower at 110.87 as possible resistance if the 200 EMA, which is just above 110, doesn't work prior to that. Otherwise, if we break below it, I will be looking for 108. And if we do break below 108, I'm going to start turning quite bearish again. on the USD yen, because I also need to show you here and remind you that on a weekly basis, because this is the weekly chart of the USD yen, on a weekly basis, as you see, we never actually managed to close above this broken trend line support acting as resistance now, right? So there hasn't been any damage done to the move lower so far on a weekly basis. That's why I maintain a slight bearish bias, although I haven't been trading it actively. I've been trading some of the crosses, though. I'm still short, for example, the euro yen, and it's moving quite nicely. I perhaps trust to close half of my position with profit at 131, just above 131.50. But regardless, it's a nice trade. I'm still looking lower for 129. So I think up to 129, no real support here. The reaction after breaking below this ascending wedge was initially slow, but it's definitely on pace, and I do think that 129 will be tested eventually. Okay, we have a question about the Swissy. I just saw. Let me visit the Swissy. Listen, the Swissy has been a beast. We've pinpointed several areas of potential resistance, and some of them were very nice areas. I mean, confluences of multiple resistance zones, and the Swissy hasn't really cared at all. I mean, if you see the move, especially the acceleration of the move that began at the 17th of the month, and what has ensued since, it's just amazing. Now we seem today to be penetrating above another confluence of resistances, which is the parity level. Parity has acted as support resistance multiple times in the past. It's also this ascending channels resistance. Now, of course, the day isn't over yet, and you never know. We might see later on like some kind of a reversal, and we might end up holding this confluence of resistances. But so far, we seem to be breaking above it. If that's the case, the next area of resistance is the 78.6 fib, which comes at 101. At some point, obviously, we have to see some type of a pullback, and I would really like to see a pullback come down to this confluence of supports at 0.9850. I think that's going to be probably a good buying opportunity. But until then, I mean, I can't advocate that somebody should be buying. This is insanely overbought already. I mean, RSI is hitting 83. And I do think that, without seeing a pullback first, there is not much to do, but just monitoring it in awe. Now, having to do with risk, because obviously, it's important. Unfortunately, my very initial assessment when we had some days of the first few days of a big sell-off, I said that the bullish scenario is staying in a very choppy environment between the highs and the lows. I actually repeated that again once we found a double bottom here, which will last for several weeks at least, because such a move lower would need several weeks for the overbought conditions to be worked off and for the market to feel confident again to push to new highs. I have to say that for every day that passes, I feel more confident that the correction in time is now more or less sufficient, meaning that you can also see it from this range. I mean, the range has been tightening. The 200 DMA has been holding very nicely. And as long as that's the case, I've already tried being long twice. I got stopped out at break even both times, but I will still keep looking for opportunities probably to be long as long as the 200 DMA is holding, because, as I said, the time that has passed correcting in time more than in price looks to me sufficient. I cannot exclude the possibility of another push to the downside. I cannot exclude it at all. But I have to say that, and if we do break below the 200 DMA, we'll be looking for 2480 or even 2400 as areas of support. But I have to say that, the chances have increased, in my opinion, that we might break out to the upside and resume the uptrend. Okay, so I'm monitoring closely this 2,705 level. It's the 61.8 of the last leg lower. it also more or less coincides now with this descending trend line. If we do see a break above it in the S&P, I will start becoming a lot more bullish. Until then, we're in the middle of this range. I totally understand why somebody would not want to get involved at all. I want to show two more indexes. One is the DAX, because the DAX is now testing confluence of resistances. It's the 61.8. It's this horizontal area of support resistance. You can see how many times it has acted as a supporter and resistance in the past. We seem to be attempting a breakout today. I was monitoring this level, and it can still happen as a very nice opportunity to see a pullback towards the 12,400 level. Let's see. I mean, we're going to know by tomorrow. We're going to know. Same deal with the FTSE. The FTSE is, we said that if it didn't find actually resistance at the 61.8, it might push higher at the 78.6. It's currently there. This recovery has been amazing. I mean, let's have a look at it on a weekly chart. This is the DAX on a weekly chart. You can see that so far we've seen 6 consecutive weeks to the upside. So far, this is the 7th, but of course, it's extremely early in the week, so I'm not taking it into account. And equivalently, if you have a look at the FTSE, you can see how amazing of a recovery that has been, right? 5 consecutive weeks to the upside, but it's not how many weeks only it has been. It's how strong it has been, because if we actually measure this move, you can see that from the lows to today's high so far, it's almost an 11% recovery within 28 trading days, right? So this has been a very, very strong move. At some point, it's going to get some type of a pullback, but I have to be very honest. I will probably be looking to buy this type of a pullback, especially given the fact. First of all, let me say that a rebound in the cable might coincide with the pound, with a pullback in the FTSE, because we know there is an inverse correlation. That it's not absolute, but definitely, you know, a weakened currency or a strengthening currency does affect inversely stocks here. And you know, we might see at the same time some type of a pullback in the FTSE and some type of a rebound in the cable. But since I've already told you that I'm also looking for any rebound in the cable to short it, you can understand that at the same time, and for other reasons as well, I think that probably we should be looking for opportunities to buy pullbacks in the FTSE. Okay. Now let's have a look at a few questions, and we will get some extra inspiration from there, I have no doubt.
Steve, I'm happy to report that whatever you did to fix your mic or your system, it's working.
Stelio, it was probably, I did 2 things at the same time, so I cannot guarantee which of the 2 it was. But in most probability, which is extremely weird, it was Firefox that was creating the problem. I was concurrently using instances of Firefox and Chrome on my computer. I switched everything over only to Chrome. And from the 2 things I changed, I think that this has by far the highest probability of being what played a role. So probably Firefox was somehow interacting and giving problems to GoToWebinar.
Okay, good. Well done, though. Well done fixing it.
Yeah, thankfully, because you know how many hours I've spent.
Yeah, absolutely.
I might miss the mime analysis just a little bit. Now you can laugh.
And by the way, you know something. I want to thank everybody. We had a lot of people on the webinar that were trying to suggest ideas, etc. And you know, I thank you very much for your interest. I spent, you can't imagine how many hours of the webinar, you know, with Velu trying to troubleshoot, because you know, to troubleshoot, you also have to replicate the conditions and try to see what's going on. And since it wasn't something that obvious, you know, we started testing the most obvious scenarios, and then we started trying to think, you know, scenarios that had extremely low probabilities of being the case. But you know, as is always the case, I think Sherlock Holmes had said that when you eliminate you know, all likely probabilities, you know, whatever is left, no matter how unlikely it has to be, what you're looking for, right? So I think this was the case here. Okay. We have a question actually about USD INR. Okay, sure. Let's USD with the Indian rupee. We haven't. By the way, let me show you USD ruble. I'm still along half of my position. Let me take you fast through some exotics, and we're going to have a look at the USD INR, USD ZAR as well. So far, it's in a recovery mode. I've told you that I expect these kind of moves that we're seeing here to prove corrective in nature. USD TRY, it has been a beast. I warned you multiple times because Turkey has real problems as well not to try to fade this move. But I have to tell you that if for some reason you're looking to be short this pair, which I would really not suggest it. We've reached some interesting area. We're currently testing this ascending channel resistance a little bit higher at 431. We have the 161.8 extension of this corrective move lower. So I would say that, if there is to be some kind of a pullback, we're getting near the point that I would be expecting that to unfold from. Okay. So from here, from a little bit higher, some type of a pullback, once again, we should be able to see. But I remain bullish USD Turkish lira. As I said, Turkey has many problems and they're not likely to go away anytime soon. Now, USD with the Chinese yuan, we've already seen some kind of a bullish break, above this descending channel. But for me, this horizontal area of support now turning resistance just below 640 is more important. So I actually want to see a break above there to then expect an extension higher towards this area, 646. By the time we get there, I expect that the 200 daily moving average will have also converged or even confluence with that. So that will be a nice target for a rebound. Okay, now let's have a look because our friend actually asked for the Indian rupee, the USD with the Indian rupee. We haven't had a look at it in a long time, but this is what I was looking for back then, and I remember saying so. And I need to show you here. We had a friend asking for how they can recognize the trend. Usually you can recognize the trend just by zooming out and seeing, in which direction the large moves take place. So I have to tell you here that USD with an INR with the Indian rupee was in a very well-established uptrend. You can see that since July 2011, we had been in an uptrend until we actually found a double top in 2016, near the end of 2016. You can see it here. You can even call it actually triple top because we had that bounce earlier up at the 69 area. And then we started moving lower. But just look at the move lower, right? Compare this move and this move. I think there is absolutely no question which direction the impulsive move and in which direction the corrective move was. So now, if we zoom in, you can see that even this corrective move was in a wedge. We actually broke above it. We consolidated a little bit, retesting the wedge's resistance and support. And now we're pushing higher once again. Bottom line, I would be looking higher. I would be clearly looking higher. Obviously, 69 is a very strong area of resistance. There's no question about it. You can see that it has already acted as a backstop multiple times. But until that point, just let me show you. Consolidation here. We broke above it. Another little consolidation here. We broke above it. At some point, obviously, we're going to see some type of a pullback, but I would be probably looking to buy this pullback. Okay. So I think it's constructive. I think I wouldn't be trying to fade this move, not for anything else than short-term reactions. Okay. Yeah, you can expect 69 very easily. 69 seems to be acting as a magnet. Now, I don't know if the central bank is intervening at 69. That's why we've also seen 69 being such a strong level many times. But I really don't see any real strong support until 69 once again. Euro pound. Let's have a look at it. We have a question about it. Okay, euro pound, we're seeing a very nice reaction from the 61.8 of the last move lower. Actually, so far, this looks like an evening star formation, the last three candlesticks. If we do close anywhere below, let's say 88, 88.10, it's going to be an evening star formation, which is once again going to point as a near-term signal lower. But in all honesty, I mean, I'm really bored of this pair, right? I would eventually want to see it break to the downside to test 83. But until that happens, and as long as we remain for so many months within this slightly descending channel, I'm just monitoring it, right? I don't think it's worth committing to a position here, because I bet there are a lot of people that have been attempting to time some type of a breakout in advance, and they must have failed multiple times. Anyhow, Dale, I see that it's time for your interview. If your guest is here,
Yes.
okay, perfect. Okay, so we will be here tomorrow, as every weekday, and thank you very much, and enjoy the interview.
Okay, buddy. Thank you very much. Hi, Kevin. Welcome to Face. I'm now going to pass you the ball, buddy, and looking forward to hearing your voice. And perhaps you brought some things for us to see. There's your desktop. Let's see. Let me unmute you.
From what I see here in the status, I don't think he has cooled yet, because it's can be muted until they've entered their pin. Yeah, he needs to call and enter the pin, or of course, alternatively use as a method of voice communication the the microphone. So it's
Yeah,
up to
he
him.
called in because his headset wasn't working. So you're saying
Okay.
he'd have to call back again?
No. It says here that he needs to enter the pin.
Okay. Do you know the pin?
How do all the others that are calling in get it, Dale? I don't know. That's why I'm asking you. Let me see.
Okay.
I guess I'll find it in the platform. Wait.
Some find it.
Perhaps the system gives it to him. Actually, I'm guessing, because I don't remember others asking. So I'm guessing that the system gives him some type of a pin.
Why don't you try this, Kevin? Now I think he's gone. Yeah. So he heard you. Okay. So why don't you go to the red? There you go. Kenneth Martino, thank you. So try it with that pin number 563. Thank you, Kevin, and thank you, Kenneth.
It says here in the platform that I'm seeing Dale. Oh, no, now he's fine. I can unmute him. There you go.
All right. Hey, can you guys hear me?
There you go. Yes. Perfectly fine. Thank you.
All right. Hey, thanks for your help.
Kevin, welcome to Face. How are you, buddy? Nice to meet you.
Dale, I'm doing good. Great to join you guys.
So did you bring some instruments or some things that are on your radar to talk about? I usually start off talking about how people got into the industry. Why don't you tell us a little bit about your indoctrination to trading?
Sure. And then I'll tell you, to give you a little preview here, at Zacks, I am primarily a model portfolio manager. So I'm just picking stocks picking stocks short-term, long-term. And so I've got a lot of macro stuff that I want to talk about. And I don't have a planned presentation, but I have several things that I've been working on that are just part of my process that I do, every week, if not every day, looking at the fundamentals, looking at the technicals. So we'll go over that.
Yeah, that's a great company. A lot of people heavily rely on Zacks and the content they provide for investors and traders. So I didn't get that from your profile on Twitter. So that's good to know.
Yeah. And probably the reason.
How'd you end up over there?
Well, in the way that you and I probably know each other is through FX, because that was what I did in a former life. From 1998 to 2008, I was an institutional FX market maker, and and I was doing spot futures arbitrage for a firm between the futures and the cash market from the introduction of the euro. But I was looking for something different because they started to automate everything, right? The robos moved in slowly in the 2000s. And by then a human couldn't do arbitrage anymore. So I started looking for different things, and I was always interested in equities. And in 2008, I went and worked for a big options trading firm here in Chicago. And it was just a fantastic experience for me because I'd already had a
Were they at the SIBO?
They had people on the floor at the SIBO, but they were primarily, providing institutional liquidity. I used to call them the Goldman Sachs of options. I'll just tell you the name of the firm. The name of the firm is Peak Six. A lot of people haven't heard of it, but they ran large volume in a lot of equities and their options. And
I didn't know. Were you born and raised in Chicago, Kevin?
Yeah, I was.
Interesting.
Yeah. So I mean, so much has happened here, right? The IMM, right? In 1971, Nixon kills the gold standard, takes the dollar off, and right away, Leo Melamed at the CME was working with Milton Friedman to, how do we justify and validate that we need currency futures in a floating, free exchange market? And they pulled it off. I mean, from the time that Nixon closed the gold window in August of 1971, the CME futures, the IMM, launched in the spring of '72. That's how motivated and ready.
I was there above Riverside State, on Riverside Plaza Drive, and actually I was running orders out to those IMM guys, and they were trading off a chalkboard.
Yeah.
You remember that?
Oh, yeah. Well, no, that was before my time.
Oh, maybe I'm imagining it.
No.
I didn't know we were going to be talking about this kind of ancient history in the market.
Yeah.
So, God, you've been doing this a long time, buddy.
It's funny. I got a good tie-in for the ancient history because I didn't walk on the floor of the CME there on Riverside until 1994. And now I work right across the street. But let me show you a chart.
Now they're bowling alleys.
Well, yeah.
Right.
Nothing we can do about that. Hey, can you see my screen?
Got it up there, looking at the S&P.
Yes, and do you see that time period? That's 1994 right there.
Okay. So
can you see that?
So you have some type of fractal from 94 you're using for 2018?
What's interesting, I mean, yeah, you could say that. And I don't use the word fractal all the time, but I look for patterns of history rhyming. And so what's interesting is this chart was actually made by another trader, and I borrowed it from him because it spoke well to several themes. Who was your last speaker you had on presenting in the previous hour?
Steve Bulgy.
Okay. That gentleman referred to the correction in time that the S&P has been going through. And I agree with that. That's been one of my themes is like, when are we going when is this thing going to be able to get away from the 200-day and 2600? You know, is it? And finally, we've exhausted the bears, I think, and and there's enough confidence, despite any trade war fears, we can take it higher. So the idea is, at first I was calling for a V bottom in February. Well, we got one, but it wasn't solid. So then we had to revisit it with the W bottom theme, and then even the W bottom wasn't good enough, right? Here, you know, we can't even. We're making higher highs in the NASDAQ and in semiconductors, but the Dow's breaking down. And so then it looked like, oh my gosh, do we really have, you know, what is this going to be? What kind of bottom is this going to be for the S&P in this correction, or is it going to extend further? So here's the analog that this trader came up with, that, hey, triple bottoms happen all the time. You know, maybe that's what it takes here. And so, you know, and that's kind of what the S&P has been working on. And
so where do you think the S&P is in comparison to this chart now?
So I think that the S&P has created its bottom. So we had something of a W bottom, and the NASDAQ held on to bullish structure. And by bullish structure, I'm talking in the simplest terms possible: higher highs and higher lows.
Yeah, especially the NASDAQ 100 looks like it's incomplete. Yeah. I'm looking for a third drive up there. But getting back to this chart, would you say the S&Ps are kind of in the position as they were on this chart, say in February?
Well, you see this correction. This correction you're looking at from 1994. Look how long it really took to make a triple bottom. It took all the way until December to confirm that, and then we went into a long bull run. Now
so we could make lower highs in the S&Ps, maybe a higher high in NASDAQ, and definitely a lower high in the Dow because of the bifurcation.
Yeah, I mean, I think that the S&P is going to get it done here. Obviously, we still have trade war fears, and we still are in the worst 6-month period that comes every 4 years, and you know what that is: midterm election season. So there's plenty of reasons to just sell and hit the beach, but you know, we're in the middle of one of the strongest earnings seasons ever. So let me use this chart to also tell you a little bit about my history. So this chart, you see 1994, you see that collapse in March that the S&P experienced? That was when interest rates started to rise. Remember that?
Mm-hmm.
Yeah, so I was actually working as a telephone refi guy, you know, where you cold call people to refi their homes. And I did that job for about 2 days, and I quit because not only did I not like cold calling people at home to ask them if they wanted to refi their home, but interest rates had just spiked higher in early '94, and that's why the stock market, you know, fell off the map there, you know, from S&P 475 to 440. So it was really hard to get, you know, it was like credit conditions were tightening. So what's interesting is I leave that job and I go find a job at the Merck as a clerk, right, in April. And so I came into the markets at a really exciting time where interest rates are rising. How can this be good for the stock market? And then a year later, we enter one of the greatest bull runs ever, right, from 95 to 2000. So that's why it was kind of fun to show that chart. But I've got some more charts to show you, stuff that I'm looking at here. Let's get rid of this guy.
So you're pretty sanguine here, looking for new highs. You agree that time is more important than price. So what do you think timing wise?
I think the market is telling us that. The market is telling us that it can work through this in time, because there's all this, you know, we've got uncertainty about the trade war. We really don't know what the White House is going to do next and how it escalates. So, you know, that creates uncertainty for corporations. And I haven't heard a lot on conference calls where a management team is saying, hey, you know what, we're a little bit worried about what's going to happen with trade. So we're holding off on this, you know, these expansion plans or whatever. You're not hearing that overtly, but since the uncertainty is there, large investors are kind of anxious and playing it cautious too, because they don't know which way it's going to go. Is it going to escalate or is it going to die? Can you see this article I wrote on May 2nd? Stock market waits for trade war to rage or die. This is actually a video I made, and
you think
an
it's
article.
do you think that it's going to escalate past it being a negotiation?
Unfortunately, I think the White House's strategy and approach is too chaotic for anyone to know, and that's the problem. Is that even if this turns out to be a clever negotiating tactic, we just don't know how it's going to unfold. It could be this tit for tat thing. Last week at the Milken conference, one of the co-founders of Alibaba, his name is Joseph Tsai, I think, he said, "Hey, this is probably a really bad time for a trade war. You've got the largest middle class in the world, which is China, arguably over 500 million people that are waiting to buy American products. So we could be shooting ourselves in the foot, even though things need to be done, even though China there may be some unfair practices that need to be addressed. Having a brawl about it, I don't know if that's the best way. But regardless of my opinion, the point is what are large investors doing? What is a Steve Mandel doing of Lone Pine? Or, what is Ray Dalio doing? What are these guys that manage billions of dollars doing right now? Are they buying stocks based on this uncertainty, or are they just? I've called it a buyer strike, and that's why it became a correction in time, because we've had sort of a buyer strike.
And wouldn't you consider it bullish that retailers have been pulling money out of the market at a pretty fast clip this year?
Using retail sentiment is, I think it plays a role. I like to look at. I still like to look at Investors Intelligence. One of the oldest sentiment surveys, which are the newsletter writers like me. And in January, mid-January, the bullish sentiment was off the charts. We were at highs. It was over 4-1 bulls to bears in January, which we hadn't seen anything that high since 1987. And that's when I said, hey, that's when the Dow just kind of went vertical. I'm like, this is not going to last. But then we go to this other extreme, this malaise sort of, over the trade war, or potential trade war, I should say. And it's just, we're having to grind through it, waiting for buyers. So I want to show you. So we've talked about the bullish structure that the Nasdaq maintained, and even the SOX index had it until it lost it. Let me see if I can find that chart. I actually was a buyer of. Let me show you here. I won't. So can you see this? I added to LRCX on Friday. So Lam Research is one of my favorite, semi equipment makers. I added there just because I thought the semis can really pull this off, and I have to find my semi chart where I paint sort of a inverse head and shoulders. Let's see where I put that puppy.
And next, I'd like to ask you about what's been happening in energy. Kevin, about 4 years ago when crude was under $40, and all the economists said, well, that's really a tax cut for Americans because they have that much more money in their pocket. Well, they can't have it that way and then not say $70 crude, and if it's heading higher, is it going to have a deleterious effect on consumer? What are your thoughts there?
Yeah, I mean, here's the thing with fundamentals, is you can pick out individual fundamentals that matter to the market. The thing is they don't matter that much, and they take a long time to play out.
Yeah, so the tipping point. Yeah.
Yeah. So cheap oil was a tax cut, but there were other things going on too. And so I try and when I look at the fundamentals like the economy and earnings, sometimes I try and back up and go as big picture as possible before I make a decision to go to 50% cash and start listening to the bears, I say to myself, well, what is the economy doing? Oh, the economy is still growing at 2.5%. That's a positive for equities long term. You know, and what are earnings like? Are earnings still accelerating? You know, I mentioned the potential trade war several times, but the fundamental that I didn't mention that matters more is earnings. And if you want to look at the glass as half empty, which many investors are, is have we seen peak earnings growth? If we are seeing, you know, some of the best earnings, you know, like Q1 is the best Q1 in 7 years, and you look at technology earnings growth. I'm going to show you some graphs coming up of just say, you know, the technology sector. I mean, 23% earnings growth in Q4. Well, sequentially, we're not going to be able to top that, but year over year, we're still going to be beating. It's just that the rate of growth is declining because the comps are getting so much harder. So some investors are going, hey, we've seen peak growth. The best is behind us. Time to sell stocks. Before I show you those earnings graphs, can you see my SOX chart here?
Yeah.
Yeah. So this is what I started looking at. I posted one of these on May 1st on Twitter and again on May 2nd. This is sort of my hope. It's like the semis, either they're going to break down, you know, beneath this support level, which, you know, you could call an inverted head and shoulders, but this 1200, 1225 level, you know, 5% lower and it's lights out, or, you know, we've got 20 to 25% upside. Because,
you know, if you lay up that chart against the NASDAQ 100, the SOX looks like what the NASDAQ 100 could do for the third drive. So SOX is ahead of it, and maybe you could get a new high in NASDAQ 100 and just a retracement in the SOX.
Yeah. See, what happened for the SOX? Well, I mean, the SOX, I'm bullish as long as the NASDAQ holds up and the SOX holds these lows. You know, we had this bullish structure where early April was a higher low for the SOX, and then what did we do? Took it out. So then I was getting worried, but you know, everything else has been so strong. So let me get rid of this chart here for a second.
I don't know. I just prefer to be long the relative strength and sell rallies and relative weakness.
Yeah, I mean, you know, if you're depending on, you know, and it's all about your time frame too. We hold a lot of stuff for a while. Alibaba, we've held for over a year now. So I'm running a short-term tactical trading portfolio here called TASER. Stands for Technical Analysis plus the Zacks rank. And yet, when I find a fundamental growth story that smart investors are not ignoring, like Alibaba, the Amazon of China, then I stay with it. We bought Alibaba last year at $100, and we still have some of those shares. And we just added recently under 180. And I don't think I don't know where it is. I suppose I should look before I talk, but there's my U.S. dollar chart.
So for people, you run a fund as an RIA, as a hedge fund manager, in what capacity?
I do not. I do not. No, I am not an RIA. This is a model portfolio. So
I see.
People who come and subscribe trade their own capital. Okay. Yes, exactly. A model with real-time recommendations. You know, as soon as I'm buying or selling, members get an email or a text alert about what I'm buying or selling. So
and this is part of Zacks or separate from Zacks?
No, this is part of Zacks. Yeah, TASER is part of Zacks. Beat the market last year, beat it in Q1, and just continuing to look at economic and earnings fundamentals and staying with tech because, you know, that's where the growth is. Let me see if I can find my earnings charts here. This is an article I wrote May 1st on Lam Research. If anybody wants more details on Lam Research, just come to Zacks.com, type in LRCX, and you'll find this Bull of the Day article. Let me see if I can find my earnings charts here. Oh, we'll go to this. We'll go to my technology supercycle theory. You know, for 3 or 4 years, everybody's trying to call the top in semiconductors, and you know, it just doesn't happen because this time is a little bit different because we have so many new technologies and industries. You know, from mobile, the cloud, and AI that are extending the cycle beyond what anybody thought was possible. So here's a thing I wrote in December to try and help people understand what was going on. Why could the technology supercycle persist? And it has to do a lot with, you know, big trends in the economy. Like, why is there no inflation? You know, why has there been no inflation? So, you know, you've got all this economic disruption from new technologies. And what happens is they create productivity that you can't see. When the U.S. government issues a productivity number, there's so much of the government in there that hides real productivity growth. But if you look at individual industries, say in technology or in healthcare or something, you're seeing 3, 4, 5% productivity growth. And then the other missing link is inflation. The inflation doesn't show up because the cost of everything goes down. Everybody's familiar with more. What's that?
Let me ask you this: is Zach's planning to put in robots using AI to replace guys like you and me?
Not at this time. And believe me, I'm on the.
We have, buddy?
I'm on the lookout for it because it happened to me in FX. I got replaced in FX.
Okay.
But you know, I've interviewed the guys from I can't think of the name of the company now. Guys running they're running you know, an AI system, and it's coming. Listen, I think the big firms are already experimenting with it. Morgan Stanley's experimenting with it, I know, and so it could come out of nowhere. I mean, I could be gone in 5 years. You know, it's just something I have to accept. But
okay, well, I tell you what, we'll exchange phone numbers.
Yeah,
and we'll still talk to each other if that happens.
So here's an important chart. This is from NVIDIA. Now we all know about Moore's. We all know about Moore's law, where you know, microprocessors shrink and double capacity every 18 months.
Right.
But that started to level off. You can see those are the blue lines there, the blue dots. What NVIDIA says is that GPU computing will extend and amplify Moore's law to give us incredible productivity that is almost hard to imagine across industries. And
for, you know, amateurs like me, what is GPU computing?
Oh, I'm sorry, graphical processing unit. So originally invented for games, right?
Yeah.
They were originally invented for games, but what Jensen Huang figured out that he could do with his GPU graphics chips is he could do parallel processing on a scale, on just an unimaginable scale. So instead of having a supercomputer with 6 mega-core Intel processors that still have to do serial inline processing, a GPU computer can have thousands of these tiny cores that can all be calculating simultaneously. And that's how you do AI. That's how you do AI machine learning and AI deep learning. You know, so that's what's driving so much of data analysis and what we're going to be able to do with autonomous vehicles. So that's Cooker's Tech Supercycle. And you know, I put it out there, and a lot of people say, no way, you know, chips are going down, and here we are. Back then,
I'll tell you what, I had no idea what to expect. I didn't, and you know, I went to the website that you had on your profile, and I didn't know about Zach's. So the best way for people to follow your research and subscribe would be what?
Definitely just come to Zach's. You can read a bunch of my articles for free. You know, like this one here. Actually, I got to go back in here. So if you just go, you know, you could find my page, Kevin Cook. You can find some of my recent articles. Here, let's take a look at 4 earnings growth charts you need to see. Take a look at this article because it has the earnings growth charts. I want you to see where a quantitative fund manager could be cautious to bearish looking at some of these charts. All right. So here we go. First of all,
Great website.
let's look. The first thing you're seeing is this is the S&P 500.
Yeah.
Here's the historical earnings growth. Q4 was 13%. This Q1 that we're in right now, I mean, it started out at 16% growth.
Yeah.
Now it's well over 20% year-over-year earnings growth for the S&P 500. Now Q2 that we're in, there's no sequentially it's going to drop, of course. How can it top 22%? But look at these year-over-year numbers. Year-over-year, Q2 is going to top last year by almost 18%. Q3 is going to top last year by over 19%. This kind of growth would make investors buy. Fund managers are like, pedal to the metal, interest rates are still low, the economy is still accelerating. You do not go to cash. You do not talk about bear markets. You do not talk about recession. You buy, because the cycle is not over and we're not at euphoria yet either with sentiment. So
yeah,
that's a very
I know some guys looking for 4,200 in the S&P by the end of not this year, next year. And
is that a technical call or is that a technical call or a fundamental call?
It's a wave count call.
Okay, that's technical. Okay. And that's great. But I'm telling you from a fundamental perspective that this chart, this kind of data tells fund managers to stay long and keep buying on the dips. Okay. Now let's look at the problem child, which is not really the problem child. It's the hero of the stock market. It's the technology sector. So here's the technology sector. Look at this growth. I mean, this is why, I've been pounding the table on technology. Yeah. You stay with, what's that? Yeah. Why it led. Exactly. Yeah. And so what kind of situation do we have now? Well, we have a situation where Q4 was the best ever, probably never to be topped again, 24% earnings growth in a quarter. And then the current quarter is strong, not as strong, but we're going to get all these sequential drops. Now, this is still year-over-year growth, but we've seen the peak in the rate of growth.
Got it.
Is the thing. And so that makes some technology investors cautious. Now, especially if they've got profits that are 3 years old, then they're like, okay, I'm selling my NVIDIA, I'm selling my Lam Research, I'm selling my Micron, because that's if a fund manager owns 1 million shares or 5 million shares of something, he needs time to get out. So that's why they're going to sell into rallies, and that's what they've been doing. But I think that this growth is still a reason for a nimble technology investor to stay long and to look for new highs. I'm looking for new highs this year. I don't know. I can't say we're going to see them this summer because it could still be a rocky summer into the midterm elections. And who knows what happens with the White House trade war. So it's a time to be nimble. But I think the bottom is in as long as, there's nothing really bad that happens with the trade war.
Well,
all right, I've rambled on, and we can.
What a great perspective you brought in here today. So I really appreciate you being with us, Kevin, and I wish you continued clarity in what you're saying for people. And you're my trading warrior brother, and appreciate your time today. And I hope success follows you for the rest of your career before we're replaced by AI robots.
Exactly. All right, Dale. Well, thanks so much for having me.
I still think they won't be able to teach them trader intuition.
Absolutely. And you know what? Even when I traded against the first robo in 2001, and that was Monroe Trout. You know who Monroe Trout is, right?
Yeah. Yes.
Monroe Trout was clearing a Rand Financial at the CME, and I traded against him electronically. And it was the first robo, and they've gotten better. But I've always said, even after the flash crash in May 2010, that the machines will eat themselves. The machines will kill each other. And so there's always going to be opportunity for quick and smart traders.
I concur. So
All right.
thanks again, Kevin. Great
All right,
meeting
Dale.
you. All right, so keep in touch. We'll do this again. We'll see how things are progressing, maybe in the fall. What do you think?
Sounds great.
Okay, Kevin. Good hunting.
All right, Dale.
All right. That's a wrap for us today. Space Warriors, if you have any questions about brokerage houses, remember, go to our sponsor, Forest Park Futures, and give Trent a call. See everyone for Turnaround Tuesday. And remember, don't just count your pips, count your blessings. You're welcome. See everyone tomorrow. Thanks again, Kevin.
Adios.
Adios.